Welcome everyone to the webinar. Um, let's see. We will be taking questions until the end. So if you have a question, just write it in the chat. If your question is directed at a certain speaker, just write their name after your question, and so we'll let them know if they have a question. Um, Unfortunately, one of the speakers, Kim, will not be joining us tonight. She's with Fairway Mortgage. But her slides will still be included in the presentation. And her contact information is also included at the end. So if you have questions about her slides, you can give her an email or a call. She's really great. Let's see here. All right. So this project, this webinar is Beyond the Front Door Budgeting and Financing for an Accessory Dwelling Unit on Your Property. This is funded by the Stratford Regional Planning Commission, which received $950,000 of HUD funds on behalf of all 9 regional planning commissions, RPCs, to be distributed equally to update their individual regional plans, which help guide development across the region while improving quality of life. So the scope of this grant also includes funding for each RPC to conduct outreach and engagement, which we have completed, update comprehensive regional plans, which we're in the process of doing, and then conducting a pilot project to implement the recently completed Regional Housing Needs Assessment, RHNA, which can be found on our website. And that is this step of the project. So our first step of the pilot project was there were 3 in-person open house events where experts talked with attendees about design, construction, funding, and permitting for your accessory dwelling unit. And so now we're following that up with this webinar series that will have a more in-depth discussion about ADUs. And so this one, as I mentioned before, was about budgeting and financing. All right, today's agenda. Um, let's see here. I just want to. Okay. Um, first we'll talk about budgeting and financing. Then we'll talk about insuring your ADU. And then lastly, I have some resources to organize your process. And if there are more resources also, there will be a Q&A. Q&A will also be provided on our website along with all of the resources in a document. So those will be clickable and searchable. Let's see here. All right. Today I'm joined by Ryan Pope, who's the Senior Director of the Multifamily Development and Finance in New Hampshire Housing. Kim Doolan can't be here tonight, but she is the Littleton Branch Manager of Fairway Home Mortgage, and Sharon Washwick Francis, founder of Washwick Agency. And actually, quickly, if each of you want to introduce yourselves to the group, I think that would be great. Um, Sharon, if you want to go first.
Oh, muted. Would help if I unmuted. Hi, let's try that again. I'm Sharon Washwick Francis. I'm the owner of the Washwick Agency here in Bethlehem. We also have a office in New York. Um, I've been in the insurance business. I basically told my dad one year, he had asked me when I got out of college to give him a year. And so I found out that I kind of gave him my lifetime. I'm still doing insurance and I live and breathe it. So I have a team right here in Bethlehem and I love helping people out. So that's who I am.
Nice. Ryan?
Hey everybody, I'm Ryan Pope. I oversee the multifamily development group at New Hampshire Housing at least until tomorrow. It's actually my last day at New Hampshire Housing at the end of this week. But prior to my work at New Hampshire Housing, I was a banker for a very long time, mortgage, commercial, all that stuff. And then I was the housing navigator and housing policy planner in the city of Dover for a period of time, where ADUs were definitely a big concept. And it provided a really neat opportunity to leverage kind of the banking background that I had, the policy work that I was doing, to start talking about financing. So this is a subject that is very near and dear to my heart, and I am very pleased that I was invited to be a part of this.
Yeah. Yeah, thanks for joining us. All right. So I will start here. I'm just going to go over an overview of kind of what are ADUs, who lives in them, why should we build them, etc. So what's an ADU? It's a secondary dwelling unit. Some people refer to them as garage apartments. They can be referred to as granny flats, basement units. Oftentimes, and the most often term I hear is in-law suite, and also a backyard cottage. So who lives in an ADU? Students can live in ADUs. Older folks, first responders, teachers, nurses, um, and also Fonzie. Fonzie lived in a unit above the garage. So ADUs have been a thing since the 70s. This is not a new concept. Um, which is really awesome. I love the Fonzie reference. All right. Why should we build ADUs? So they provide affordable housing units. They're infill rather than greenfield development. So we're filling in our communities rather than developing in the scenic areas of our communities. It encourages generational families so that young and old, again, that students, those if you have young adults or older adults, maybe your parents, it allows kids to stay in the region, and then it's an additional source of income. So what can you do to support ADU development? Businesses can create a unit for local workforce. Residents can build an ADU or attend educational workshops like this one here. And then officials can support local ordinances and state legislation. So ADUs at the state level. So ADUs are allowed in all zoning districts by right, and municipalities can't require conditional use permits or special exceptions. So municipalities must allow one accessory dwelling unit without additional requirements. And that House Bill 577 is right here. And then so there are also revised state definitions. So House Bill 577 also allowed accessory dwelling units by right. And then in 2025, it was revised to also include detached units here, which is defined meaning a unit that is neither within nor physically connected to the principal dwelling unit. So that could be like the backyard cottage, for example, rather than like the basement unit, which would be attached. All right. And I will hand it off to Ryan.
Thank you so much. So this presentation, as you can see on the slide here, I had created in January. So I think most of the information is largely up to date. Still, not much has changed. At least in the in the world of money, accessibility rates, and the concerns surrounding pre-development costs and whatnot. But today, I'd like to kind of share with folks cost considerations that people should be mindful of, as well as some of the financing solutions that have recently become available. Obviously, these slides will be made available to you, which is great because there is a very local financing option in the form of Fairway. And I'm always excited when more and more institutions sign on to this. So we can jump into the next slide now. So starting with cost considerations, and I apologize if this is redundant for folks who were part of kind of earlier parts of this webinar. I wasn't able to attend, so I don't know what was covered, but I'll do kind of a cursory review. As a former planner, I always recommend that folks start with their municipality when they're thinking about doing anything on their property. What's allowed, what isn't, how big can it be, all of those other considerations that kind of start. So that's very much here. As far as like what the design standards are, distance from the principal building, all of those pieces. That's all spelled out in your local zoning ordinances. But it never hurts to call the municipality, talk to whoever is staffing kind of the planning conversation or the zoning administrator to talk through what those stipulations are. Um, Actually, something has been updated on here because in January of 2025, I was asking whether or not the municipality had a by right, conditional use, special exception, variance ordinance for things surrounding ADUs. Um, Now it's largely by right, unless you're looking at doing, two or more, which I think is only allowed in a couple municipalities. So we don't have to get too deep there. But the other things just to be mindful of are kind of the building permit process, the inspections process, what fees, be they kind of investment fees or impact fees, inspections, all of those things. There's a cost to doing business with any municipality that requires a permitting process. And having that conversation early in the process really helps you understand what those particular costs are going to be before you really get started in kind of the architecture or the hardcore kind of planning and the exciting part of building the ADU. So we can get to the next slide. All right. So this to me is the fun part. I think it is to most people. When you think about like the design, like what's it going to look like? How big is it going to be? Is it going to be attached? Is it going to be detached? All of those are kind of going to flow from what the municipality allows, what that process is, and how that will work in your community. But the things to kind of consider in here, and this is obviously fluid depending on what the needs are. But as Taylor was saying earlier, ADUs take any number of forms. So they can be in the attic, they can be in the basement, they can be above the garage, they can be in the backyard. All of those things have different costs associated with it, be it foundation, be it kind of repurposing, be it the sheetrocking, all those other pieces that kind of come into consideration. Um, at this point, you should be thinking about like, do I need an architect? Do I need an engineer? Is that required by my municipality for some reason or another? And typically speaking, if it's kind of a basement renovation, probably not, unless you're looking to do some major structural work. But again, all of those things come with cost associated. And again, I cannot stress enough, starting with your municipality to talk through that process, understand what the requirements are for that eventual approval. Even though it is by right, there's still standards that have to be met. And then for things like detached ADUs, when you think about like the site itself, uh, you have to consider setbacks, you have to consider encroachments on potential, I would say, encroachments on, rights of way. I'm sorry. Encroachments on rights of way, things like that, that you just have to be mindful of when it comes to your property. Every property is unique. Every municipality is unique. We're lucky in New Hampshire that we have, 240 plus independent republics who make their own rules. But these are the kinds of things to be mindful of as you're thinking it through. And then a big thing that is a cost that we always like to make sure that folks are aware of is the water sewer availability. Can Is there water sewer available? If not, that's okay. But the other consideration to take into account is if there is a septic system, can that septic system pretty much accept the loads from an additional unit on the property? And that's another conversation that you would be having with the municipality. And if there are upgrades to that or tie-in fees, those are things that you definitely want to be mindful of if this is something that you are considering. We can probably get to the next slide. All right, and this is my PSA portion. So when it comes to lead safety, effective July 1st of 2024, Any new rental unit created within a pre-1978 structure requires a lead-safe certificate issued by a licensed New Hampshire risk assessor prior to occupancy. Um, that's a legalistic way to say if you build an ADU and it is not occupied by a family member and you receive any income from that, um, you have to work with the state to ensure that the entirety of the building, if it is an attached unit or encased within um, a pre-existing home that was built before 1978, that a lead safety assessment has to be done to ensure that the unit and the primary structure do not contain lead paint and don't pose a hazard to residents and especially children who might be occupying it. So that's something I like to put out there that was new as of a couple of years ago, and is definitely something that folks want to be mindful of if they're building an ADU with the intention of leasing it to someone who is not a family member. Next slide. All right. So now we can talk about construction and contingency. I work in multifamily development by day, and I am perpetually surprised at how expensive it is to do just about anything. So when you're considering doing work within your house, obviously the construction costs of things are going to range pretty wildly depending on what you're doing. Like if you're refinishing a basement that already has drywall in it and just needs, flooring and maybe a toilet or something and a kitchenette, um, that's going to cost a lot less than building a brand new building in your backyard that's kind of fitted up to the nines. So as you're thinking that through from a budget standpoint, I like to say that you should anticipate costs between 250 in and around the seacoast region if it's kind of a deluxe ADU detached scenario. We're seeing those come in at 500 or more dollars per square foot. I'm not saying that's the norm or that should be the norm or will be the norm forever, but definitely something to be mindful of. So what I did here is a little bit of quick math. If you think about like split the difference, if it's going to be $350 a square foot and you're building a 780 square foot unit, you can anticipate a construction cost of 273 thousand. And with that construction cost, that is obviously just the cost of the core construction. It doesn't take into account any of the pre-development costs, insurance, any of those things that will also be required within the property. And then the other thing that if you are working with a bank, they'll probably require it. But if you're paying for it out of your own pocket, I always like to share as well that you should anticipate cost overruns always. And budget in a contingency of at least 5 to 10% of that total construction cost in the event you run into unforeseen issues. Or things change. Obviously, we live in a world where tariffs are a thing. The cost of construction materials and their provenance is changing all the time. And just different things to be mindful of depending on where the materials are sourced from, what the cost of labor is going to be in any given area. And you never know what you might find when you open up a wall or dig into your backyard. So the contingency definitely like on top of what you're anticipating to spend, add 10% to be safe. And I did 8% for math here. But if we're anticipating kind of a $273,000 construction cost, that contingency would be 22,000. So the real construction cost for you, the self-developer, you should really be considering in and around the 295 category. So we can go to the next one. All right. And then obviously, as with everything, making any improvement to any property has impacts for the long run. So like any real estate investment, there are going to be long-term costs that will need to be factored in. You're going to hear a bit about insurance from Sharon when Sharon is up, but the increased value to your property because you've added an additional unit will increase your taxes. You will also have to anticipate the maintenance and the upkeep of that new unit. So these are the kinds of things you want to be mindful of as you're planning for developing an additional unit in your home. but being sure to kind of anticipate those costs, set aside from any income that you might be receiving from it or within your own home budget funds for the eventual repair and replacement of things that are pretty standard in any home or real estate development. The fixtures, the roof, water heater, the septic system, the any really any of those things, paint, fixing dings, all that stuff. Next slide. All right. Now I get to talk about how to pay for it, which is very exciting. So there are all kinds of ways to pay for this type of development. I'm going to start with kind of the conventional options first before we get into a couple of the more nuanced ones. But when it comes to financing for this type of renovation, the kind of tried and true old time bank solutions are, well, they tend to be mortgage based or home equity based. So these ones here are in and along the lines of your more traditional conventional mortgages. So think about a cash out refinance. In a case like that, what you do is refinance the home kind of as it is with and any additional equity that might be available in there. You can leverage to support the construction of an additional unit. In that particular case, that loan will replace your existing primary mortgage. The rate will probably be higher because it is based on a future value and because construction is generally risky. And that loan amount tends to be based on the home's value as it exists today, as opposed to with the additional unit. That said, a cash out refinance is a little more favorable when it comes to interest rate and term than it would be for more of a construction loan. So in the case of a construction loan, it's very similar to a cash out, but you get to use the as complete value of the property, which would include the additional unit or two, which is great because now you can borrow more money theoretically because the home's going to be worth more. But that's really where that construction rate kicks in and where it becomes a little more expensive than you'd see with a more traditional cash out refinance. Usually a higher rate. There are usually additional fees as far as construction monitoring and other aspects that the bank will want to impose in an effort to mitigate its risk and make sure that as it's kind of paying for construction as it occurs, that is in fact occurring. In both of these cases, if it's kind of that refinance mortgage option, be it for cash out with the existing value or construction with the future value, those options will replace your existing mortgage, which I know can be problematic for people like me who refinanced at the bottom of the rate market several years ago and is sitting pretty on like a 3% mortgage. I'm probably not going to refinance that into a 7% mortgage just to add an additional unit to my house, increase my balance, increase my rate. It's just not a winning term, and I wouldn't want to charge the kind of rent to whoever might live there to make up that difference. So those are, each talk to your banker, talk to your lender. They'll be able to kind of guide you in the path that best suits you. But those are kind of the core pieces of the more conventional refinance options. So we can go to the next one, and I think this one is on the home equity piece. So what's nice about home equities is it's typically a second lien position, so subordinate. You get to keep your first mortgage, and any difference between kind of what that outstanding balance is and the value of your home you can borrow against gets to leave that potentially preferable rate in place on the first. And then you're maybe paying a higher rate on a smaller balance that's more targeted and focused to the construction of the new unit. In both of these cases, the amount you can borrow is still going to be based on the current value of the home. So you don't get to take into account any of the potential future value or future earnings that you might receive from that accessory dwelling unit. There's typically two types of home equity loans. There's a loan and then a line of credit, or a HELOC, as they're called, for home equity line of credit. In these particular cases, again, the loan amount is going to be based on kind of that differential between your current outstanding balance with the primary mortgage and the kind of value of the home and anything that you can kind of borrow against it. They are typically restricted to no more than 80% of a combined loan to value ratio, which means that if the home's value is, $100, well, $100,000, we'll use round math that's a little more realistic, but not at all in the current market. If it's $100,000, then the total of those two loans can't be more than $80,000 if their max is an 80% loan to value ratio. So those are the kinds of things you can think about. If in that scenario you had a $60,000 primary mortgage, the most home equity loan you could receive or line of credit that you could receive would be $20,000. That's the round math. Obviously, it scales up with property values, but that's probably the simplest way I can describe it. And I will be around for questions after if folks are confused by. I do this all the time, so don't mind me. So with a loan, the nice thing about the loan is that it is fixed rate typically, which means that the payments, the interest, the principal amounts won't change, and you'll pay principal and interest off like you do a car loan. The line of credit option provides a little more flexibility in use. You only pay on what you borrow. It's typically interest-only terms for a period of time. And you can use it for other things as you choose. When I worked at the banks, we used to leverage home equity loans for home improvement. We had people who used it to pay for their kids' college. It's a nice and flexible option if you have the equity in your home and if you're willing to kind of leverage your home for other purposes. But that is another vehicle for it. And now, Taylor, you can go to the next slide and we can talk about the new financing options and what is so exciting about them to a nerd like myself. So the new solutions we're seeing are in and around the world of home improvement financing, which, as you can see on the slide, combine features from both a construction refinance and a home equity loan. What's great about this type of financing is that the loans typically take a subordinate lien position. So they come in behind the primary mortgage, which means you get to keep your primary mortgage in place. So if you're me and I want to build an ADU in my backyard, but I don't want to get rid of my 3% mortgage rate, I don't have to. I have my 3% mortgage rate and I get to take a new loan out at a higher rate, probably, definitely, to pay for the work that I'm going to do on my property. Another neat feature about this is that this type of financing that we're seeing coming out now allows you to use the future value of the property. So with the new unit to determine that loan to value ratio that we talked about when we talked about home equity lending. So if you think about like today, my house is worth $100,000, but if I had an ADU, it would be worth $150,000. When I'm calculating that ratio, I get to think that it's worth $150,000 once it is done. So it gives you more borrowing power while preserving that primary mortgage that might be at a more preferable rate. With these programs, they can also be utilized for renovation. You don't have to use them to build an ADU. You can use it to redo your kitchen. You can use it to, I don't know, add a bedroom or any number of things. But there's a lot of flexibility in use that doesn't have to be, ADU specific. It's not quite a downside. It's just a recognition of the additional risk of this kind of approach to financing. But the rates for these products tend to be higher than what you would see in a traditional home equity loan. But they also tend to be fixed. So they're not going to fluctuate like they would on a home equity line of credit. The other things to be mindful of with these products are like construction loans. They will come with additional fees for construction monitoring. There'll probably be disbursements from the bank to you or the contractor to make sure that work is occurring. And someone's probably going to pop by occasionally to make sure that when you're paid to, build a portion of an ADU, that's where the money's going. Um, and in some cases, the rental income or potential rental income that you could claim from the new unit will be used in the income verification process to help you qualify from a debt servicing standpoint. So that's a really neat feature. It's not available everywhere or writ large, but it is something that we've been talking to institutions about kind of expanding their programming and considering that as an additional income source for people when you consider um, how much debt they can carry, sustain, and realistically repay. So we can go to the next slide. And here are at least the initial adopters of this programming. So this solution, the home improvement financing, was born out of really a collaboration between the city of Dover and a bunch of local seacoast-based banks and credit unions that had a presence in and around our area. We in the city of Dover, we allowed 2 ADUs by right without any qualms. And what we were finding was that when people had come to the town to inquire as to whether they could build one, what the rules were, those were kind of dying on the vine, and we didn't see much kind of follow through on actual creation of ADUs. When we followed up with them, it was really all about the financing. So we were able to take that story from the planning office, from the city, to these financial institutions, who really kind of created this financing model, at least locally, which was very exciting for us to have partnered with. So Lighthouse Credit Union was first, Kennebunk Savings shortly thereafter, First Seacoast, Bangor Service Credit Union, they kind of jumped in after the fact. So if any of these institutions are in your community, they definitely are aware of and offer this. We have more and more banks and credit unions kind of adding to this list every day. This is the one from January, but because they're first adopters, I love mentioning them kind of every time. And then in the next set of slides, there is a hyperlocal option for you guys as far as Fairway Mortgage, which I know are included in the slides. The features are broadly the same across the board, and that is also fantastic. So key takeaways from my part of the presentation. The final cost of building an ADU is variable. Obviously, it depends on where you live. It depends on the location of it within your property. Is it inside? Is it outside? Is it attached? Is it detached? Is it in the attic? Is it in the basement? All of those are going to factor into how much it's going to cost to renovate. I cannot stress enough that if you are planning any construction project, just factor in a contingency for safety's sake. 10% is, I don't know, I'm risk averse, but 10% is safe, generally speaking. And then just anticipate that once this is done, your taxes will increase. Your budget for property maintenance, be it personal or be it for a rental unit, will increase. Definitely start with your municipality and then talk to your bank, your lender, anyone you trust in kind of the financial world who does real estate lending on the kind of residential level uh, to help you find the option that is going to be best for you in your scenario. Obviously, I am emotionally attached to the home improvement financing because we had helped launch it in Dover. But that doesn't mean that that's the solution for everyone. There are cases where straight up construction financing or home equities or a cash out refinance might be to your financial benefit. So talk to your lender. They will guide you in the right direction. And that's all I got.
Okay, thank you so much. All right, here. And then these are Kim Doolan slides. I am going to scroll through these, but don't be afraid if you're missing information on here. Everything will be posted on our website, including um, this recording of this webinar, our Q&A with all the resources, and then the slides, these slides themselves will also be posted. And now I will hand it off to Sharon.
Hello, everybody. So just welcome for those that can make it and those watching this later. But I'd also like to thank the council, North Country Council, for hosting today's conversation. Very important. Even I'm learning sitting here going, two college kids. But I am Sharon Washwick from the Washwick Agency. I own the insurance brokerage, independent, which is extremely important, insurance agency. But I might overlap on a little bit of information in regards to what ADUs are, but I'm going at it from the point of what it is regarding the insurance and how the insurance is viewing it. Um, we're going to be talking about the importance of the housing because it is a great solution to New England, but it does have insurance impacts. And I have found out especially up here, actually, just in my business in general, people think you got an insurance policy and it's filed away, or it is a PDF on your computer that you're insured. That's not the case if you have changed situations on what is being insured. So just because you have a policy doesn't mean if a claim happens, you're insured. So that's why we're going over this today, because while ADUs are a great option, you want to make sure that you are also ensuring your investment in what you're doing. So we can go to the next slide. We're going to start out on slide 2. So basically why ADUs are growing in New England. And like I said, this might be overlapping, but it's from the insurance viewpoint. Aging, we got aging in place needs for seniors. We got a lot more that would like to be spending time at home with a loved one nearby or in the home of a loved one. I have the situation, I've got adult children returning home, college kids that, I want to be able to provide for. There's a demand for more remote workspace, more affordable than moving, or new additions along the way. So New England has been uniquely positioned for ADU growth, basically due to demographic, economic pressures. So we've got a lot going on, and also the cost advantage. Building an ADU is often significantly more affordable than upsizing or adding an absolute full-on addition to a home. So they're flexible to modern living, but you need to know that there, as this slide is showing you, the different types of ADUs that are going on that you could do. And each one of these have a ramification. Just when you say ADUs, also what they also call DADUs for the sake of insurance, are covered differently. So just because, hey, I just did one over the garage, and then your friend down the block did a basement conversion, does not mean you guys would qualify for the same exact policy. I cannot stress, always talking to your agent is a good thing. It is heartbreaking when I have somebody come to me and they're like, I didn't reach out to my agent and this is this position I'm in. And I'm sitting there going, I wish you had talked to somebody. I wish I talked to you before you even did it. So each one of these types of ADUs, again, over the garage, attic conversion, you add the addition, which comes into like a builder's risk category, a backyard cottage, whether it was already there and you're converting it, or you are building something brand new, or that basement conversion. You're gonna want to make sure that in each one of these types of ADUs, first, just like Ryan was talking about, talk to the municipality, but talk to your insurance agent. Make sure that the current policy and the company that you have is able to ensure what you are doing before you start anything, because it might turn into another policy. And also how you finance one of these is going to affect the insurance policy. Financing and insurance hand in hand here, because your insurance companies are going to make sure that you show that you have the insurance in place for what they are funding you for. So it's critical that when you get the funding, because the bank will start going in place, the last thing they ask you for is insurance. It's not the first thing. It's generally the last thing, and then it's a rush job in order to get you closed It's, wait, we need the insurance. And you just called me. I didn't know you were doing this. This is a step process. It might take a couple of days. We don't have a couple of days. That's why stress. Mortgage, insurance, hand in hand. You're doing anything to your house that's worth financing, you need to be talking to your agent. I wish we were mind readers. It would solve a myriad of problems, but we're not. Okay. So talk to your agent. We could go to the slide 4. Okay. So again, we're talking about, kind of redundant here a little bit, but detached ADUs are covered under other structures. That sets you aside for an entire different portion of your insurance. If you're looking at your policy, okay, kind of a little deep dive into your insurance policies that you probably might not have looked at. You think, okay, I'm insured. You have your Schedule A or your Coverage A. That is the replacement cost of the big home. If you're doing something that's detached, it's not connected to your house, something in your garage, that's going to be in a detached ADU. That's going to be covered under other structures. So we need to be raising limits, not on the replacement cost of your home, but on that other structures. Okay. So if you do the interior, which is inside of your home, that's going to be increasing the cost of your dwelling coverage, which is that Schedule Coverage A. Okay. You don't want to be over or underinsured in either one of these areas, because insurance isn't so that you feel better. It is to make sure that in the event something does occur, you're covered. And again, just because you have an insurance company does not mean, or insurance policy does not mean you're covered unless the policy is covering what you are doing. Another key feature in your policy and insurance implications, unless you are clear and upfront on what it is you're doing, the value of what you're doing, you could be having a replacement cost that is inaccurate. Let's say your house started at $350,000 and now you added a ADU. Let's say it's interior. Okay, so we're going again, your Schedule Coverage A, interior of your home, and it cost you about $75,000 to do so. But you kept your schedule and your policy at $350,000. In the event everything goes up in smoke, quite literally, you are not going to be able to recover the cost of what you just did on your home. You need to make sure that you have the full rebuild value. I don't want to get into the weeds here, but there's different types of replacement cost value. There's different types. So you want to kind of get into the weeds of your policy to make sure, in the event of a claim, what you're truly covered for. Also, if you decide that you're going to go rent your ADU or even your detached ADU, and you're renting and you're taking in income, that's a different type of policy that now needs to be added either to your current policy, or we might have to do an entire separate policy. Rental use may require additional endorsements. Again, every situation is different. That's why I kind of get hit a lot where, hey, I'm asking you a lot of questions. If your agent isn't asking you a lot of questions, you're with the wrong agent. Okay. The whole goal is, if you're doing something where you're adding to your home, you're adding to the value, there's questions to be asked. Make sure that you are getting these questions covered so that you are properly insured. You're already putting in a investment, you're investing your time. You have a lot going into this to make sure you are properly insured. The next slide. Okay, so there are key underwriting concerns in New England. New England is not like, the traditional, you go down to Texas or certain homes like let's say Florida, and the houses are one size fits all. You can go into a block and there's tons of developments. Up here in North Country, we don't have tons of developments. Your house can look different from your neighbors drastically. One could be brand spanking new and just a brand new build. The next house can, be from the 1800s. So these type of things that you're going to see is you have electrical risks. Does it have knob and tube? Does it have fuses? Is it aluminum? How old is your electric box? When's the last time you had an electrician in your home? Older plumbing is a concern. Okay. Um, you want to make sure and look at your plumbing system going, oh my goodness, I haven't had a plumber, haven't had an issue, but haven't had a plumber in here in 30 years. Before you're doing any of this, it's gonna affect your build, but it's also going to affect insurance. Wood stoves, even in the main portion of your home, now you're adding to your home and you're thinking, hey, the wood stove or the pellet stove really heated well in our main dwelling. We're just going to add one in the accessory dwelling unit. Please don't. Please don't. You are putting yourself in an entirely separate insurance category. Okay? That's what I mean. Can't stress talk to your agent. Unpermitted construction pushes policy to surplus lines. That lovely surplus lines is an area with insurance that you don't want to be unless you have to be. Okay? The idea of insurance is to insure what you have, what's valuable to you without having to spend bookloads of money doing it. Okay? Having the least amount of premium for the right coverage. If you go and you're starting to just do unpermitted construction and you're messing with a whole lot of things, it's going to mess with your policy. Okay? Unlicensed and uninsured subcontractors, a very main underwriting concern. It's hard, first off, to get good contractors and subcontractors up here in North Country. Some of them are fantastic. I've been writing down a list. Every time I get a client that tells me they're doing I'm like, oh, do you like them? Yes. I'm like, all right, I'm writing their name down. I'll give it to the next person. Okay. Because first, you want to make sure somebody that you bring in there for insurance purposes get it done timely. Why does that matter? If they don't get it done timely, it may affect your policy. Again, pushing you to that surplus lines. Okay. If they're unlicensed and they need to be unlicensed, or let's say they're not insured, not cool. My slide there should have said uninsured. Why do they need to be licensed? It's covering you. Why do they need to be insured? Because if something happens, and you also need to ask them for your certificate. It's going to help you with your insurance. So if you have a contractor that goes, I don't want to pay the insurance because it's too much money, you don't want them to enter into your accessory dwelling unit doing any work. Guaranteed. Okay, this is about covering you and keeping your rates lower. Roofing and age condition of the current roof, of the current establishment matters. I've had people do an ADU and they only update the new roof. Well, that does not necessarily matter. You're like, hey, it's got a new roof. Insurance carriers are also going to look at the other portion of the roof. And that's what you're going to get insured on. And if that roof is anywhere over, depends on the carrier, 15 to 20 years. Yes, I'm absolutely aware that how do you say it? Roofs. Sorry, I apologize. My accent was about to get me there. Roofs can last and are warranted, some for lifetime, some for 50 years. Insurance carriers don't care. They like to 15 or 20 in what they would call, because I have a slide that tells you about it, in admitted lines. Think the most inexpensive insurance, like newer roofs. So if your old portion is old, over 20, 30 years, it's going to affect the entire policy. The next underwriting concern is whether it's seasonal, it's temporary, or is it year-round? Intended occupancy. The occupancy of what's going to happen with your ADU absolutely matters. Are you doing an Airbnb? Is it just your 20-year-old kids? What are you doing with it? Are you renting it out to, the nurses that are coming by and the traveling nurses? What are you doing with it matters. All right. So I've been using that lovely word, and I did in quotes, surplus lines. Okay, so let's go with admitted lines. Admitted carriers follow state regulations and protections and prefer low risk and offer lower premiums. Layman terms, this is a carrier that does will take something that has less risk of loss. Okay. They want your home to be metal roofs. As soon as I say somebody's got a metal roof, they're like, "Mwah, that's fantastic." All right. As soon as I say that your roof is 30 years old, they're like, no. Why? Because they see flooding as an issue, the roof being flood. That next time we have a nice, lovely windstorm, which we tend to get with the snow, something is going to happen. They don't want to pay claims. So the admitted lines are the ones that are going, we don't want to pay claims, so we're not going to take as much risk. Your surplus lines are higher risk or non-standard homes. So once you start with that roof is too old, your plumbing and nothing has been touched, even though what you're doing might be new in that part of the home, we're most likely going to be pushed into a surplus line. And you'll be a little shocked with those premiums, because if you are currently covered underneath a standard carrier, be prepared to go, why? Why is this so much? Why are they trying to rob me? They're not trying to rob you. They're trying to say, hey, you've got more risk. You're going to pay for that risk. We think something's going to happen in the next 5 years. We're going to pay a claim on you. So they make you pay for that. So, and also comes taxes thrown in surplus lines as well. And some of them can even exclude that 30-year-old roof. They'll be like, we'll cover everything else, but if something happens with the roof, we're not replacing it. All right. So a few things to take into consideration as you're going into the world of ADUs and adding on. What does your current home even look like? What's going on with the current, so that you could be in a better insurance viewpoint, and you can also have it covered nicely, is the best way I can put it, for the next couple of years. All right. And the more complex it gets, if you're deciding to do an ADU in one of the old red barns, and the wind can kind of huff and puff and blow it down, that really complex. I might even come back to you and be like, unfortunately, I can't find a carrier that will cover it. Okay. And then that's disheartening. So cannot stress speaking to your agent and making sure that agent is asking you a lot of questions about what you're doing and giving you the information matters immensely to what you're doing as well as the future. So I got a few checklists for you to kind of review in my next slide, to kind of walk you through what you're doing when you do an ADU. Okay. Obviously, confirm zoning and permitting with local town. Your current policy most likely has, local town ordinance built into it. But again, it makes a difference to take a look at your current policy. Get current construction and replacement cost estimates. So Ryan was even bringing that up, and 10% higher than what you probably think. Okay. Make sure you have that. Verify your roof, your wiring, your heating, even your plumbing should be on that line as well. Meet insurance guidelines. And how do you know that they meet insurance guidelines? You talk to your agent. Okay. Become friends with your agent. Your agent should not be somebody you see once a year. Unless it's your car insurance, it's one person, your home should be somebody you trust. Okay. Determine if an ADU will be rented. Again, decide before you're building this and you're doing all this, what you are going to be the purpose of it all. Okay. Even think outside the box, what the purpose is after the purpose is exhausted. Okay. So I've already said it probably, 50 times. Meet with your agent before construction, in the middle of construction, 3/4 into the construction, at the end of the construction, because it may be different policies to even get you to the end of construction. The main thing is, please don't be paying a couple $1,000s in homeowners insurance thinking you are fully covered for what you're doing here, adding on, because housing is very sparse in North Country. So everybody getting into the ADUs is, accessory dwelling units is fantastic. But please make sure you're insured for it, because then it's not fantastic. All right. So thank you for listening to me. I know you will go talk to your agent soon. And I appreciate everybody allowing me to be a part of this. Oh, wait, no, I had another slide. Look at that. I even shocked myself. Okay. I did put together for you insurance red flags. Again, I already brought this up a few times, but here's a lovely if you want to take this slide and be like, walk around with it. Red flags, any of these things are going to increase your current policy, but it's going to continue to affect even as you're doing a new policy. I have dealt with clients that have an older house, added on a newer house, thinking the new and the insurance company is going to love them, and that's not the case. Okay. One thing I do want to point out here is DIY electrical work. DIY electrical work. Do not do it. Do not do it. Do not do it. Unless you are a licensed electrician. I'll give you a side story on this, and I'll try to keep it very brief. My husband was into construction, and if anybody knows him, he's a great guy, does wonderful things, but he's out of the construction now. But back when we were first married, he decided that he was going to run electric to our garage. And he ran it through galvanized pipe. And this was like 20 years ago, been married for a while, but underneath our driveway. And then he ran the electrical through the galvanized pipe, and he covered it with the asphalt. And then we started having some electrical problems, and the electrician came by and he was like, oh my goodness. First off, that was right before I got into the insurance world. So I would know now. I'd be like, you're not touching that. But it can get you, first of all, you're increasing your risk, your safety. Please make sure somebody's licensed and insured when they're in there. Okay. And multiple kitchens. Okay. If you're doing an ADU, just know that if you do a full kitchen, it's where you'll see a lot of ADUs will have the little kitchens. Okay. They'll have what they call a kitchenette. You're doing a full on kitchen with full size. That's an apartment. Okay. And yes, for insurance terms, sometimes not one size fits all, but sometimes with the carrier that we might want to place you with, that can make a difference. So now I am complete. So, oh, all right. I had another one there. Space heater. I did this timing thing and I shouldn't have done it. Yeah, space heaters are no, but there we go.
All right.
Thank you.
Yeah. Yeah, thanks so much. That was great. All right, let's see. Do we have any questions? Now is our time for questions. You can unmute yourself and ask a question or type a question in the chat. I will also include all of our speakers' emails and information afterwards also on our website. So if you have follow-up questions. Oh, great. Thanks, Aaron. Aaron said that insurance information was really interesting. All right. All right. Well, if we have no questions, I will let you all go. Have a fantastic night.
You too. Thank you.
Yeah,
Thanks
thanks so
everyone for
much,
joining.
everybody.
Thank you, Sharon. Thank you, Taylor.
Yeah, thanks so much.
Bye.
Thank
Bye.
you.
Bye.